Okay, so we're going to look at why today's market is falling. First, we're going to look at the dollar index. The dollar index has found support around 79 and has moved up to 80.085. Now, the pattern we have is that it's headed towards this resistance at 80.32. Now, what that means is the pressure in this move on the equities market is as the dollar rises, the equities market will fall. So there's an inverse relationship. This is the risk-off trade. Risk-off trade occurs when people are moving their money out of European or Asian currencies into treasuries or the dollar index. A risk-off trade is not buying gold. That's the conspiracy trade. The hedge against inflation, which means they're looking for you to buy gold so that they can squeeze you later and take all your money. But that's a different conversation. So we're headed towards, on the dollar index, we're headed towards 80.38, which is pushing up. That occurs, you might see that is coinciding with a move on the S&P 500 to test the psychological support at 1400. This, if it moves to 1400, we will see the dollar index hitting 80.38, which is the 50 moving average on the daily. So this is going to act as our resistance. We've tested it 2 times before. And if it comes to this area on this volume, you can see that on our volume pattern, we are just breaking above on our 5-day moving average in volume. We broke through yesterday at the highs, at the resistance. So if we don't break through the resistance on the dollar index, then we can look for a rally in the market. If not, watch out for a continuation. This is first move down, second move down. Look for the third continuation, or the second continuation to our low, which could push us down on the S&P 500 to 1363, 1365 area. So the question is, who wants to hold into the weekend? If we flip over and look at this on the bond market, the bonds markets hit support today, and it looks like it could rally tomorrow in this inverse head and shoulder pattern. So with the inverse head and shoulder pattern, we've got our head here, so with support coming in the neckline, $145.21. In this area, it's showing that we can go back up to 148. Now, if that's the case, then we'll watch this break through the resistance and the market to continue down. So, same inverse pattern here. The risk-off trade, buying bonds, buying dollars. As it goes up, the equities market goes down.